Well, good morning, everyone. I am not personally a very religious guy, but today is Christmas, so if you celebrate that, go enjoy your friends and family. I know I'll be enjoying my friends and family today and not recording, so that is why I made this video in advance so that I wanted to answer a couple of questions. Uh, One question I was getting is just people wanting me to share the stock list or watch list that I have that I've picked for my trades, and that is about impossible because it's constantly changing. I'm always looking for new underlyings that fit the criteria that I work within. So what I use basically is stock screeners. For the most part, I use a simple one in my Robinhood account, but if you don't have a Robinhood account or any fancy software, you can create your own lists out there with sites that are basically free. So about one of the best ones that I found is going to be FinViz. Let's pop over here. Google Finance, you can get a lot of information on various tickers and market news and stuff like that. But as far as like a relatively free stock screener, FinViz works pretty well. There are features you can unlock by becoming an elite member. I myself am not an elite member. I just signed up for the free one, and if you're willing to put in a little more time, it works as well as I need it to. I don't come here that often, but I wanted to show you guys basically how a stock screener works and how I pick the stocks that I am willing to put my money behind. So right now we're on a blank stock screener. I don't care about what exchange it's on. Market cap, I'm generally looking for stuff. Mid caps are better, over $2 billion of market cap. Earnings date, I don't need to see that here. Price, let's just for fun's sakes, for the $10,000 challenge account I have going, gotta stay under $30. We could probably go to 35 if we just picked one in that range, but that would require going to a custom range, and for the most part, I don't plan on paying for that. So for simplicity's sake, let's just say under 30. Index, again, don't really care. Dividend yield, quite often I will enter over 2%. Let's see, average volume. My computer's delaying a little bit here. Generally want to see about 500,000 shares. Daily volume, target price, not important to me. Relative volume, IPO date, industry, analyst recommendations. Be honest with you, if most analysts are behind the ball, generally following other analyst leads, or they want to upgrade stocks after they start to move positively. So I don't put a lot of stock into analysts. Let's see here. Shares outstanding, current volume. These are all things you could select, and you could fine tune your own stock criteria. Okay, fundamentals. Let's pop over here. PE. I generally want to get something over 15, often over 20. Price to cash. Let's see, not worried. Debt to equity. Let me stick under 1 in there real quick. Let's see. Okay, payout, forward PE. I mean, there's so many various things you can put in here that it's kind of crazy. Earnings per share growth year over year, or this year over year, quarter. There's all kinds of good stuff. Yep, earnings per share growth next year. I mean, it's kind of almost too much information. So you got to figure out what's important to you and go from there. Technical, You guys know I like to look at stochastics. RSI is a very similar indicator. I could, in fact, pump in whether I want to see something that is oversold, overbought, but I'm not going to do that for right now. So for where we stand here, we've put in just 6 different criteria. Okay, we can see the 6 we've chosen amongst the full list, but let's just simply, we're already sorted by price. And let's see if there's anything in here that kind of gets our attention that we haven't quite noticed yet. I try and avoid stocks typically, in the $5 to $10 range, but I'll always take a peek and see what's there. Nokia, not interested in them. I don't hear their name on a constant basis anymore like I used to when cell phones first started. But okay, so we'll just scroll down the list here and see what there is to look at. Anything that grabs our attention, because I generally like to trade stocks that I have some knowledge about. I'm at least aware of the company. I know what field they're in, what industry they're in, and it's something I've heard of, something I'm familiar. It just makes it a lot easier to put my money behind it. Not to say you can't go and investigate any of these companies, but that takes time. If you want to start going through and reading quarterly reports and all that good stuff, have fun with it. I think there's enough well-known stocks out there where that's not necessarily required, and nobody wants to make this a full-time job. I don't think we're trying to find a way to make a little money with a little effort and just keep some positive cash flow growing and grow our accounts over time. So let's see, anything in here look familiar? I mean, Prudential, I don't think that's the insurance company, but I could be wrong. Oh, it is. There we go. So we've all heard of Prudential Insurance, I'm sure. None of us are fans of insurance companies, I'm sure. But anyways, you can, just simply, you can click any one of these. I prefer to open in a new window just for fun. And you can take a look at it. And I believe there's some indicators available here or whatnot. But for the most part, jump down into the finance. If you're more into visuals, let's just quickly take PUK, puke. That's funny. Insurance makes me want to puke. Let's jump over to Google Finance here and just type in PUK real quick, just see what we got. Okay, I want to max this out, maybe 5 years, see what their general trend is. It's a downward trend, and you can look at their total revenue versus their net income. Their revenue seems to be staying about the same, shrinking a little, but their overall net income has shrunk a bunch. So that's never a good sign. So we're not interested in puke. So let's see what else we got here. Apple, that's not the Apple we're thinking about, but okay, work our way down here. I've heard of Sabre Healthcare. I'm not really into the healthcare stocks all that much. Key Corp, we've heard of finance, banking, Host Hotel Resorts. Okay, keep moving on down here. Hey, there's Pfizer. We've got that on our list already. So when you see, Kinder Morgan, okay, we're all familiar with Kinder Morgan, I believe, and oil and gas. Oil and gas is going to be having a really hard time here over the next few years with the incoming administration wanting to drill, baby, drill. Basically, it's going to be good for jobs, but bad for investors in oil because we're already doing more oil than we need here in the country, I believe. But For the most part, the more oil we produce, the lower the price of oil, which is a good thing in the long run. But from an investment standpoint, who wants to be invested in oil companies when oil's selling cheaper and cheaper and cheaper? It's just not a great investment opportunity. So we're going to skip old Kinder Morgan there. Kennametal, I happen to have a bit of experience here with my machine shop and all, so they make great cutting tools. But most of the world's not really familiar with them. Let's see. Anything else in here? Nothing else in here really caught my eye. So that would require going in and, well, let's back up a page. Let's go look at Kennametal real quick. So that's KMT. Let's pop KMT into here. KMT. Because I've never really looked into them as a company. Maximum, well, looks like growth over time. Even if you just draw a straight line from here to here, that's a long, slow incline. Definitely done some chop along the way. 5 years, not so great. We're going currently. Yeah, very similar. But let's scroll down here to these numbers. Okay, so revenue increase just fell off here in this quarter, but they generally maintain profitability. Whether you think that's enough net income overall versus the total revenue, that's up to you. It's up for you to decide. Some companies work on smaller margins and some do not. Some have much healthier margins. Again, healthier margins come with bigger risks. But for the most part, you can kind of see what I'm talking about here. You just pick a screen and go. But for fun, let's just see what else this is. Let's just see if there's something we can add to our watch list here. Nokia. Let's take a peek at that. Okay, maximum time frame. Hey, look at that. Wow, massive spike early cell phone days and then just disintegrated. Maintaining here for the last 5 years. Wow, in the last year there's been some growth in Nokia. Something I wasn't aware of, hadn't had a real reason to look at it. Increasing revenue stabilized here over the last 3 quarters, but net income has dropped even into the negative here and coming back to positive. So positive, negative, positive, negative, positive. Eh, not exciting at all. So what else can we find? There's got to be something in here that we can use, or maybe our criteria is a little too tight here. Let's get rid of this dividend. See what that does. Oh, that added quite a lot. See if there's any names quickly that we might recognize. And so now we got 6 pages to go through. Things are, the fine print on here, the tiny print is a little harder to read. Not quite as visual and booming as what's going on in Google Finance, but it is what it is, right? I guess that's what they say. Let's see. There's got to be something fun in here. Riot. Hey, there you go. A little Bitcoin play. Let's take a peek at Riot. I'm not all that interested, but doesn't hurt to look. Okay, 5 years. Fairly steady in the last sort of year or so. Choppy. Not terribly profitable. Let's see, it's losing 2 to 1 here. It's losing 1 to 1 or better here. They had a profitable quarter there. Fantastic quarter, really. Break-even quarter. That is one of those gambling underlying. So you just gotta take a chance. If you jump in, make some money, get out, stay out for a while. Because if you keep putting money in it, it's going to be like going to the casino. They will win. So let's go back over here, see what we got going on. Solar winds, solar is going to be taking quite a hit with the new administration coming in. Let's see. Oh, all right, we're getting up to the $18 range here. Gold. Okay, that's always good to play with. Let's just peek at gold. Come on. There we go. Barrick gold. And up and to the right over the years. Let's see, slight decline in 5 and choppy in the last year to date, or 1 year, I should say, which is pretty much a full year to date. Okay, but you can notice consistent revenue, consistent profits. That's always good to see. You know what? Let's just add that one back over here in the TastyTrade. Gold, Barrick gold, and add that. So here we go. Let's take a peek at gold on the chart. Oh, just came below the lower Bollinger Band, and it is in the oversold area here, but that's not what we're here for today. We're talking about the screeners, although I'm glad I put this on my radar. We will consider that one for the future for sure. Okay, anything else we might want to add to the watch list? Okay, let's see. I have a lot of names here. Now, if you guys are seeing anything that's, hey, Sony, we've all heard of Sony for sure, but haven't looked into them, but they're in the price range for this account. Let's do that. Let's jump over here and go Sony. Take a quick peek at the fast charts here. Look at that, up and to the right, up and to the right, up and to the right. Like to see that. That's the good consistent trends. Let's see. Definitely smaller margins, but looks like the revenue is declining over the last year. But it looks like the profits, the net income is actually rising up a little bit over that same period. So when you can see these two maintain about the same revenue, but look at the net income 231 to 338. You know, you're talking about revenue 3.48, 3.01, 2.91, declining revenue, but at the very same time, net income of 189, 231, and 338. So whatever they're doing, the changes they're making are working. So let's pop back into a little TastyTrade here, and we're going to add Sony to our list also. Let's see where they're at. Okay, so they're up here at the top edge of the Bollinger Band. It's just pulled away from the top high, but they're into the oversold category down here. Just another one to have on the list. For the most part, today's video is just to get out here, have you guys have something to watch here, because I know you're used to having things 3 times a week from me, and that is my plan and my goal is to generally film on Mondays, Wednesdays, and Fridays. Monday because, well, I quite often need some new positions because expirations come on Fridays. Well, that explains why we're filming on Fridays. We want to look at our positions here as they're expiring. And then Wednesday, why not? It's in the middle here, hump day, as they say, and go from there. So, in fact, Release usually is the following day, so I might have lied. I won't be releasing this on Christmas Day. It's probably going to come out on that Thursday just to maintain the schedule and make the YouTube algorithms happy. Speaking of which, if you like what you see and hear here, then just, hey, you know what to do. Like, share, subscribe, all that good stuff. And thank you so much for watching. Enjoy your family.